Welcome to the deep dive. Today, we're really digging into something that touches pretty much everyone now: identity fraud and identity theft.
It feels incredibly relevant, doesn't it?
Absolutely. And we're using material you've shared from FinCrime Intelligence. They really focus on this financial crime world.
That's right. Good stuff there.
So, our mission today is simple: cut through the jargon. We want to pull out the really key insights, understand the difference between these terms, how criminals operate.
The methods, yeah.
Exactly. And the red flags, what's being done to fight back. Basically, give you the crucial info without drowning in technical details.
Getting the core understanding.
We'll look at how just one piece of stolen data can, well, explode into a major crime. Some really surprising ways identities get misused.
And the tech side of it, too, how it's used by both sides.
Right, the weapons and the shields. Okay, let's dive in.
Let's do it.
So, first things first, definitions. We hear identity theft, identity fraud thrown around, sometimes meaning the same thing.
They get mixed up a lot, yeah.
The material's clear, though. Both involve using someone else's personal info name, social, bank details, whatever, without permission.
And crucially, for fraudulent purposes. That's the key.
But there's a distinction the sources make, right? Between the theft and the fraud.
Yes, and this is really fundamental to grasp. Identity theft is step one. It's the act of getting that information without authorization.
Just acquiring it.
Exactly.
Mm.
Think of it like someone pickpocketing your wallet or hacking a database to steal account numbers. They've got the goods, the potential means.
Like stealing the keys to the house, as you put it earlier.
Precisely. They haven't necessarily used them yet. That's where identity fraud comes in.
Okay, so fraud is the next step.
Fraud is the actual misuse of those stolen keys, that stolen information.
Yeah.
It's using the name and social to open a credit card or using the bank details to make purchases.
So applying for loans, filing fake tax returns, that's the fraud part.
That's the fraud. It's the deceptive act, the unlawful act committed using the stolen identity info. Theft is the breach. Fraud is the crime that follows.
Makes sense. Theft is getting the tools. Fraud is using them. And how do they get the tools? The sources mention the usual suspects.
Oh, yeah. Phishing emails trying to trick you, those are classic. Social engineering manipulating people into giving up info.
Big data breaches, we hear about those all the time.
Millions of records, sometimes. And, still happens, just physically stealing mail or wallets. Lots of ways in.
Okay, so they've got the info. What happens next? What's the criminal playbook actually look like?
Well, it varies. Some of it's opportunistic, low-level stuff. But a lot of it is becoming really sophisticated, almost like organized crime.
The sources list quite a few common schemes.
They do. And they're constantly adapting, using tech.
One that really jumped out at me was synthetic identity fraud. That sounds elaborate.
It is. It's fascinating in a disturbing way. It's not about stealing your entire identity, Jane Doe. It's about creating a new, completely fake person. They mix real data, maybe a real social security number that isn't actively used, perhaps belonging to a child or someone deceased, with totally fabricated details. Fake name, fake address, fake date of birth.
Wow. So they build a ghost?
Kind of, yeah. And here's where it gets really interesting. Because there isn't an immediate victim saying, hey, someone stole my identity. These synthetic identities can fly under the radar for a long time.
Right. Nobody's reporting their credit card stolen because the card belongs to a fake person.
Exactly. They can slowly build up a credit history for this fake person, maybe make small payments, seem legitimate, then bam, they max out huge lines of credit or take out big loans and vanish.
That's incredibly devious. Okay, what else? Account takeover, ATO? That sounds more familiar.
ATO is more direct. It's gaining control of your actual legitimate accounts, your bank account, email, maybe even social media.
How do they manage that? Stolen passwords from breaches.
That's a big one. Or phishing for credentials. Another method is SIM swapping, tricking your phone company into moving your number to their phone.
Ooh, that gives them access to text message verification codes.
Right. Suddenly they could reset passwords and bypass security on lots of your accounts. Very dangerous.
Then there's new account fraud. Is that just opening new stuff with stolen details?
Pretty much. Using a stolen identity or one of those synthetic ones to open brand new credit cards, bank accounts, maybe get utilities turned on, all with zero intention of ever paying the bills.
The sources also mentioned tax refund fraud.
Yeah, filing a fake tax return, using someone else's social security number to steal their refund.
Healthcare fraud, too, using someone else's insurance.
To get medical treatment, prescriptions.
Yeah.
It messes up the victim's medical records, too, which is a whole other nightmare.
And using fake IDs for jobs or government benefits.
Employment fraud, benefit fraud.
Yeah.
It covers a lot of ground.
And the scale of this, you mentioned organized crime. Is it really that big?
Increasingly, yes. What really enables the scale is the dark web. The sources point this out, these underground marketplaces selling complete identity kits.
Like everything you need.
Full packages, name, address, SSN, maybe even bank account details, credit card numbers, ready to use for fraud. It's an entire illicit supply chain.
Chilling. Okay, so faced with all this, how do banks, companies, how do they even try to catch it? What are the red flags they're looking for?
They're constantly monitoring for anomalies, for behavior that just doesn't look right for a specific customer or account.
Like what sort of things?
Well, frequent changes to key account info,
Yeah.
someone suddenly changing their phone number, email, and physical address all within a few days, that's suspicious.
Okay.
Or seeing a whole bunch of failed login attempts, maybe from different weird locations, followed by one successful login from a brand new device. That pattern screams potential takeover.
Right. The system flags that. What else?
Big purchases or large money transfers happening right after an account is opened. That's a classic bust-out scheme signal.
Makes sense.
Inconsistencies in application data. Someone applies for a loan, says they're 30, but their employment history only goes back 2 years. Or the address they give doesn't match other records, things that don't quite add up.
Uh-huh.
Also, new customers suddenly asking for unusual things, like really large wire transfers right away.
Yeah.
Or the one many people see themselves, seeing transactions on your statement you don't recognize, or finding inquiries on your credit report you didn't authorize.
Yeah, that's often the first sign for individuals.
So the detection systems are designed to correlate these flags. If several pop up at once, it might trigger an alert for a human analyst to investigate, or maybe force the user to provide extra verification.
It does raise that tricky question, though, doesn't it? How do they catch the bad guys without constantly blocking legitimate customers? That balance must be tough.
It's a huge challenge. You want security, but you also need a good user experience. Too much friction, and customers get frustrated. Too little, and the fraudsters get through. It's a constant balancing act.
And it's not just good practice for these institutions. There are actual rules, regulations they have to follow, right?
Absolutely. The sources make it clear organizations have serious legal and compliance obligations here. It's not optional.
This falls under things like anti-fraud rules and anti-money laundering, AML.
Exactly. AML is huge, preventing criminals from washing dirty money through the financial system. And verifying identity is step one in stopping that. So there are specific procedures mandated.
Like KYC, know your customer.
Know your customer and CDD, customer due diligence. Basically, when you open an account, they have to take reasonable steps to verify you are who you claim to be.
And it doesn't stop there, right? They have to keep monitoring.
Ongoing monitoring is key. Watching for suspicious activity over the life of the relationship. Plus, strict rules about data protection, how they handle your personal info. Think GDPR in Europe or GLBA in the US.
They need plans for what to do if there is a data breach, too.
Definitely. Breach notification rules are part of it, and they need to do internal checks, fraud risk assessments, audits to make sure their defenses are working.
And reporting suspicious stuff.
Mandatory. Filing suspicious activity reports, or SARs, with the authorities is a critical piece. It helps regulators and law enforcement see the bigger picture.
The sources also mention checking on their partners, like third-party vendors.
Yeah, that's crucial too. If you hand off data processing to another company, you're still responsible for making sure they have adequate security. You can't just wash your hands of it.
Okay, so we've got the crime, the methods, the detection, the rules. Let's talk impact. What happens when this goes wrong? The fallout seems massive.
It really is. For the individual victims, it's devastating. There's the obvious financial loss, which can be crippling.
But it's more than just money, isn't it?
So much more. Your credit can be destroyed, making it hard to get loans, rent an apartment, sometimes even get a job, and the time and emotional stress involved in cleaning it up.
Trying to prove you didn't do something.
Exactly. It can take months, even years. It's incredibly stressful, a real violation.
And for the institutions, the banks, the companies.
They take big hits, too. Direct operational losses, having to pay back the fraudulent charges, dealing with credit card chargebacks.
Reputational damage must be huge as well.
Massive. If customers feel their data isn't safe with you, they'll leave.
Mm.
Trust is hard to win back once it's broken. Then there are potentially huge regulatory fines if they're found negligent.
And just the ongoing cost of trying to prevent it all in the first
Right.
place.
Investing in the technology, the staff, the monitoring, it all adds up.
Connecting this back, the sources really stress that strong identity verification, especially in finance, fintech, healthcare. It's not just about protecting that one company.
No, it's much bigger. It's a frontline defense for the whole system. If you can't trust who you're dealing with online or financially, it undermines everything. It enables money laundering, terrorist financing, all sorts of wider criminal activity.
It really is the bedrock, like you said.
It is.
So, given this constant threat, what are institutions actually doing technologically? The sources talk about a lot of advanced tools, sort of a layered defense.
Yeah, it's definitely not a single silver bullet. It's about using multiple layers of technology to spot and stop fraud at different points.
Like biometrics, fingerprints, face scans,
Exactly. Using something unique about you physically, that's harder to fake than a password.
and MFA, multi-factor authentication. We see that a lot now.
Right. Needing more than just a password. Getting a code sent to your phone or using an authenticator app adds another hurdle for fraudsters.
What about device fingerprinting? What's that?
That's about recognizing the specific device you're using, your laptop, your phone, even if someone has your password. If they try to log in from a totally unknown device, the system can flag it.
Interesting. And behavioral biometrics? That sounds futuristic.
It's pretty cool, actually. It analyzes how you interact, the speed you type at, how you move your mouse, the angle you hold your phone, subtle patterns.
So even if someone steals my password, they might not type like me.
Exactly. The system can detect that the behavior doesn't match, even if the credentials are correct.
Wow. And then there's the AI stuff, machine learning.
Huge area. Using algorithms to analyze massive amounts of transaction data in real time to spot those weird patterns much faster and more accurately than humans ever could.
Document verification, too. Checking IDs.
Yep. Systems that can quickly scan a driver's license or passport image and check its security features, compare it against databases.
And APIs connecting to various watch lists and databases.
Right, allowing systems to instantly cross-reference identity information against known fraud lists, sanctions lists, public records, etc. during onboarding or transactions.
So the idea is to weave these tools together, right? Sign up, log in when making payments.
Precisely. Create multiple checkpoints. If a fraudster gets past one layer, hopefully another layer will catch them.
Looking forward, the sources say this is basically an arms race that isn't stopping.
Absolutely. Fraudsters get smarter. Defenses have to get smarter. It's continuous.
So the recommendation is what? A risk-based approach?
Yeah, that's key. You don't necessarily need Fort Knox level security for every single interaction. Tailor the security level to the risk.
So checking your balance might need less verification than wiring $10,000.
Exactly. Apply more friction, more checks for higher risk actions or customers, but keep everyday low risk stuff smooth. Balance security with usability.
And it's not just tech, right? Proactive stuff, too.
Definitely. Educating people, customers, employees about scams like phishing is still vital. Sharing intelligence between companies about new threats they're seeing.
Collaboration seems important.
Public-private partnerships, working with law enforcement. Tackling the organized networks requires a coordinated effort. The goal is to make fraud harder and less profitable across the board.
To maintain that trust in the digital world.
That's the bottom line.
So wrapping this up, what does this all mean for you listening? I think it shows just how connected everything is. Identity security isn't just about your data. It's part of this huge ongoing battle.
Understanding that difference between theft and fraud, knowing the kinds of schemes out there, the red flags, the tech, it gives you a much clearer view of a really complex challenge.
Hopefully this deep dive, using the FinCrime intelligence material, has shed some light and pulled out the key takeaways.
It's a critical area, and it keeps evolving.
It really makes you think about how fundamental identity is to, well, everything we do online and financially.
Absolutely. And maybe a final thought to leave people with. Think about that constant tension we discussed. The push for everything to be super easy, frictionless online, one-click buying, instant account opening versus the absolute need for strong identity checks to stop fraud. Where do you see the biggest challenges or maybe the biggest opportunities in trying to get that balance right going forward?